We don't really trade any markets at all. We trade our beliefs about markets. And everybody's beliefs about markets are slightly and sometimes markedly different. And you've only got to read Jack Swiggert's book, where there's dozens and dozens and dozens of winning traders who have made a heap of money, and they all have got completely different beliefs about market. Your objective is to find something that suits you, develop that process, something that suits your belief system about markets, and then do your best to refine the process and then to try and size that, to scale that. The objective is to learn how to play the game, to have the resilience to go through the inevitable bouts of drawdown, which are going to come as sure as the sun rises tomorrow morning, and to have the testicular fortitude to get through that. Clearly, a bit of position sizing will help.
And I've looked at the winners and I've looked at the losers. And it's quite simple. The winners, in fact, think quite differently from the losers. Now, when a losing trader has got a winning trade, when they've got a winning trade, they very quickly become pessimistic. They become pessimistic that the market is going to snap their money away.
Yeah.
And when a losing trader has got a losing position, they become optimistic. They become optimistic that the darn thing's going to turn around. Now, winning traders simply think differently. When a winning trader has got a winning position, they become optimistic. And when they've got a losing position, they become pessimistic very quickly. So my challenge to everybody listening is that on your next trade or your next investment, become aware of your thinking. If the thing goes your way, do your best to become optimistic and let the darn thing run. If the thing doesn't go your way, become pessimistic very, very quickly indeed. Now, if you're honest and you examine your thinking, about 90% of the people out there that try to be traders and try to be consistent get that the wrong way around. And I've changed more traders around by making them mentally aware of that little switch than anything else.
The first person who put this on paper was a fellow who died recently called Van Thorpe, who I knew reasonably well, and he called the whole concept of an edge expectancy. And in simple language, you've got to make more when you're right than you lose when you're wrong. And there's three things that contribute to that expectancy. One is the hit rate, the number of times out of 10, let's say, that you get this right. Two is the risk to reward. And three is spreads and commissions. And based on those three, you can work out how much money you're going to make.
What's more important, the exit or the entry of a trade?
I think that exits are much, much more difficult. A large part of exits are a function of your own personal trading plan. You can never get it perfectly right. I think that the thing that's important is that you've decided what your exit is going to be. We don't know what the market is going to do next, but we should know what we're going to do if the market should do that. And there's not that many options.
Our job is to find an edge in market. All you need is one pattern. That's all. You just need one pattern to be successful. The head and shoulders pattern could be your pattern. He put a chart up of lots and lots and lots of patterns. I love my wedges, falling wedges and rising wedges. Those of you that are trading Forex, there's a textbook falling wedge in the Euro 1 daily chart at the moment. I'm very fond of my fib levels and harmonic patterns, which are my own personal edge. You can make an awful lot of money with a 50% system, but very few people could trade it, because in a 50% system you get long runs of losers, and those long runs of losers will just cause you to give up. Soul destroying, absolute soul destroying. When you push your hit rate up, the probability of a string of losers goes away, and I won't bore you with the mathematics. And the whole thing becomes light and easy.
Emotion is our body's reaction to a thought. And the only way to actually stop those emotions is to stop the thoughts. So a little bit of presence, a little bit of meditation would work wonders there. I know it's not something that the average gung-ho trader wants to hear about.
But our minds have got two characteristics. They associate one moment with the previous moment, and they want to avoid pain. The setup comes again, sir, and at a level that you know nothing about, your mind sees the last two and it says, this caused me pain. And at a level you know nothing about, you'll subtly hesitate. You need to decide on a system out of all of this that suits you. And my challenge to you folks is to resolve to follow that system for a batch of trades without changing the rules.
Ladies and gentlemen, that is a rite of passage. Otherwise, you're going to be coming on courses for the rest of your days. If you want to do this, folks, quite honestly, you can start to do it in a demo account if you want, or start to do it with a real account, but just trade very low in size. Trade it at £1 a point until you get the hang of it. Let's say that you've got a trend following system and it's right 5 times out of 10. Would you all agree that if you make twice as much when you're right as you lose when you're wrong, 5 times 2 is 10 and 5 times 1 is 5, so you should make 50 pence. If you bet £1 on every trade, you should make 50 pence every time you trade. Would you agree? 5 times 2 is 10, 5 times 1 is 5, so you make 5 out of 10. You've got a positive expectancy system. So that can be very profitable. But folks, the probability of a bad one is a half. Would you agree? What's the probability of 2 bad ones in a row? Half times a half, which is 1 over 4. What's the probability of 3 bad ones in a row? Every 8 trades, you've got 3 bad ones in a row. That is a mathematical certainty. Every 16 trades, 4 bad ones in a row. Every 32 trades, 5 bad ones in a row. Can you put your system on without fear or hesitation after 5 bad ones? And that's 5 out of 10 is a really good trend following system. So you get clusters, and quite honestly, it's not the clusters of bad luck that really get you, assuming you've got a reasonable position sizings. It's the clusters of good luck that get you. A loser becomes pessimistic when they have a winner. They become pessimistic as they feel the market is going to snatch away their profits, and they end up snapping at a small profit. That's bad enough. But the loser also invariably becomes optimistic when he has a losing trade. It's going to turn. Give it a... You're no bloody good at this. Yeah. In trading, traders should think about perfect execution of each and every trade according to their own little trading plan. If they focus on perfect execution of each and every trade, then the cash will take care of itself. So my job as a trader is to make the very best possible trades and not allow my mind to move into the past where I've stuffed up before, or my mind move into the future where I might stuff up in the future, to focus and keep our mind in this moment. And if you think that anybody who's very good at their job, they do the same thing. The difference between a good golfer and a Sunday morning hacker is a good golfer focuses on perfect execution of each.
You enter the 5%. If you can grit your teeth and stick to the process for 8 trades, something mystical happens between your ears. I don't understand it, but you build that neural pathway, and all of a sudden the discipline that you required is no longer required, because that's just what you do. Your moment as an end-of-day trader is this daily bar in relation to your rules. Don't allow your mind the luxury of moving to the future or the past. Keep your mind focused in this moment in relation to your trading rules. Focus on perfect execution of this one trade. In the same way as the richest dentist in your area who drives the biggest car and lives in the biggest house focuses on perfect execution of this one root canal. God bless him. To build discipline, folks, you're going to have to grit your teeth and stick to the process. So the first step, put together your trading plan, a simple mechanical plan. The more mechanical, the better. And then my challenge to you, folks, is to follow that plan without deviation for a batch of somewhere between 20 and 30 trades. That's going to take quite a bit of doing. To build a habit, you've got to grit your teeth and do it. And then all of a sudden, you actually build this neural pathway between your ears by doing it. Somewhere between 5 and 13 trades, you build the pathway, and you'll find that the discipline to stick to the rules is no longer required, because that's what you do. You need one little edge, and you need to practice that over and over and over again. And many times you can get rid of it. Put together your trading plan, a simple mechanical plan. The more mechanical, the better. And then my challenge to you, folks, is to follow that plan without deviation for a batch of somewhere between 20 and 30 trades. That's going to take quite a bit of doing. It is a rite of passage. Your job, folks, is to have a plan and focus on the process of executing that plan over and over and over again And if you focus on the process, the loot will take care of itself. The biggest hurdle that you have is to get over the first 8 trades. Everybody in this room is 8 to 13 trades away from the trader you want to be. That's all. But very few people get there because they don't adhere to the one system until that neural pathway is built. So that's the process if you want to be successful, folks. Sit down, put together a fairly simple system, adhere to 1 to 2% position sizing, and then the real work starts of being able to follow that system through thick and thin. And you're only about 8 to 13 trades away from being able to do that. That's all.
It's so easy to lose the moment and do something silly. And the only way to actually sidestep fears is to be in this moment. And the first way to build presence is to practice being present when your self-esteem is not being threatened. And that little bar going up and down can certainly threaten your ego. And your ego's scared of death because if you're wrong, it gets hammered.
You've got a written plan that suits you. It should not be more than 1 page. Think about position sizing. And then the real exercise is to focus on perfect execution of that plan for somewhere between 5 and 20 trades. You need one little pattern. You need to practice really, really good money management, and that just means not losing any more than 1% of your loot, or at the very most 2% of your loot on any one trade. And then the third thing is to build the discipline to just do it over and over and over again.
And I've looked at the winners and I've looked at the losers. And it's quite simple. The winners, in fact, think quite differently from the losers. When a losing trader has got a winning trade, they very quickly become pessimistic. They become pessimistic that the market is going to snap their money away. And when a losing trader has got a losing position, they become optimistic. They become optimistic that the darn thing's going to turn around. Winning traders simply think differently. When a winning trader has got a winning position, they become optimistic. And when they've got a losing position, they become pessimistic very quickly. So my challenge to everybody listening is that on your next trade or your next investment, become aware of your thinking. If the thing goes your way, do your best to become optimistic and let the darn thing run. If the thing doesn't go your way, become pessimistic very, very quickly indeed. And those of you that have been around the game will know that it's incredibly difficult to follow a simple set of rules. We've got 2 brains. I'm sure you've all heard of the reptile brain and the front lobe brain. I want you to think now, folks, that you're a summer's afternoon and the barbecue's going and kids are having fun playing football, right? And you're standing there, a ball comes out of nowhere. Football comes out of nowhere. What do? Duck, without thinking about it. A similar situation, but standing there Sunday afternoon and somebody throws a ball at you very slowly. What do? You catch it. So if somebody chucks a ball at you really fast, believe it or not, and according to this professor of psychology at UCT, there's a part of your brain that actually reacts, and it reacts up to half a second faster than your normal brain, this reptile brain, and its job is to keep you out of trouble. And frequently that happens in our trading as well, where have you ever done something dumb that you've sworn you'll never do again? Okay. And that's because that reptile brain is in fact trying to keep you away from danger. Not a lion about to hit you, but in fact emotional danger. This is when I first was alerted to the power of adding to winning trades. This is where it all came from. He proposed in our course a Nancy Martingale system, which I still use on the roulette wheels to this day. With a reverse martingale, if we have 7 losers in a row, and then we get 1 win, we lose a miserable $60. But if we add when we've got a winner, we in fact make $1,270. And when we lose, we go back to the basic bet again. This still works. If you're not present, folks, there's a part of you that's designed by the Almighty, or whoever you believe in, to keep you safe and well. away from physical danger, away from emotional danger. And if you're not present, you'll find that you keep doing really dumb things. So when you're sitting in your trading desk, it's really important that you're totally and utterly there. Not thinking about the past, not thinking about the future, totally in that moment. The good trade is always the hard trade, always. Not emotionally, not intellectually difficult. In fact, the thicker you are, the better probably, but emotionally difficult. And one of the things that my very first desk head taught me, he used to always say that when it's time to buy, you won't want to. When it's time to buy, you won't want to. I drum this into the Vector S customers every Monday afternoon. Now, I started to buy stocks at the lows a few days ago, just before they went up. You should have seen the mails I got, like I was a complete effing idiot. Say that you have an expectation that this trade's going to work out, and it doesn't work out. It creates a great deal of pain. That happens again. More pain arrives. Your setup comes again, and your job is to execute that setup without fear or hesitation. But our minds have got two characteristics. Associate one moment with the previous moment, and they want to avoid pain. The setup comes again, sir, and at a level that you know nothing about, your mind sees the last two, and it says, this caused me pain. And at a level you know nothing about, you'll subtly hesitate. Has anybody ever hesitated to take a trade here? That's the reason why. And the way to get over that is to stop the pain. And the only way to stop the pain is to believe with every fiber of your body that at the level of one trade, anything can happen. So if you have pain, it's because you haven't fully accepted that fact.